Good afternoon, everyone. I understand, Associate Professor Schmulow, that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you. I note that the giving of false or misleading evidence is a serious matter and may be regarded as a contempt of the Parliament. For the Hansard record, will you please state your full names and the capacity in which you appear today?
Andrew David Schmulow, and I'm an Associate Professor in the Law School at the University of Wollongong and an visiting Associate Professor in the Nelson Mandela Institute in the School of Law at the University of the Witwatersrand in Johannesburg.
Thank you very much. And I invite you now to make a short opening statement. At the conclusion of any remarks, I'll invite members of the committee to ask questions. Associate Professor Schmulow.
Thank you. Good afternoon, Chair, and good afternoon to your colleagues on this inquiry. Thank you for the opportunity to share with you my thoughts. I think that inquiries like yours are integral to the preservation of democracy and the maintenance of accountability, and I'm indeed grateful for the opportunity to contribute to that. I thought what I would do is tell you a story. It's a funny story. It might be the funniest story ever told, but whether it's funny, amusing, or funny, pitiful, I'll leave you to decide. The story goes like this. Two PwC tax partners walk into a bar and sit down at a table. One partner says to the other, "I've got an idea for the greatest con that's ever been conducted." The other partner says, "Go on." The second partner says, "What we're going to do is we're going to create a problem. The problem that we're going to create is multinationals that pay no tax." The second partner says, "That sounds a bit risky." The first partner says, "Well, I haven't even started. Once we've created that problem, we'll then go to the government. Once that problem has become good and rancid, we'll go to the government and offer to give them a solution to the problem we created." The second partner says, "I don't like your chances." First partner says, "Not only will the government accept our advice, but in giving the government advice, we'll give them advice that is fundamentally flawed. Advice that contains all sorts of backdoors built into that advice so that we can continue to enable our multinational clients to evade tax and in the process make ourselves extraordinarily wealthy, and exacerbate the problem so that the government will continue to seek our advice on how to solve that problem." Second partner says, "Good luck with that. That's sounding ambitious." And the first partner says, "But there's more. In addition to giving the government flawed advice, what we'll do is we'll get the government to set up and pay for the maintenance of structures through which we'll give that flawed advice. We'll call the one the Board of Taxation, we'll call the other the Tax Advisory Panel. Those boards will have a direct line to the Treasurer, so that in the event that our tax-evading multinational clients encounter any problems evading tax, they can let us know and we'll have those problems sorted out very quickly." First partner says, "This is starting to sound more like a fever dream than a scheme." And the second partner says, "But there's more. We'll get the government to pay us for serving on the Board of Taxation and the Tax Advisory Panel. I'm thinking $140,000 a year each for one meeting a month, over and above the millions of dollars we get paid as partners." The second partner says, "So let me get this straight. You're going to come up with a scheme where the government will pay you $140,000 for a meeting a month to provide flawed advice to fix a problem we've created." And the first partner says, "That's correct." The second partner says, "You will never find anyone that stupid." Well, here's the punchline, Chair. Turns out we were that stupid. For more than 10 years, they have been sucking down a taxpayer-funded salary so that they could provide advice, the nature of which is to enable tax-evading multinationals to come to this country, make billions of dollars in profits, and pay no tax. Now, at this point, you might be saying to me, "Well, that doesn't sound very good, but we cannot conclude surely that this is anything other than some bad leadership in the local branch of PwC. I mean, we shouldn't assume that this is part of some deeper, wider malaise." And if you were to say that to me, my response would be, au contraire. This has happened before elsewhere. I draw your inquiry's attention to the House of Commons Public Accounts Committee report that was issued in 2015, almost a decade ago, The chair of that inquiry, the Right Honourable Margaret Hodge MP, said the following, and I'm just going to give you a few excerpts from that report from 2015. She said, "This is the second time we've had cause to examine the role of large accounting firms in advising multinational companies on complex strategies and contrived structures which are designed for no purpose other than to avoid tax." She goes on to say, "We believe that PricewaterhouseCoopers activities represent nothing short of the promotion of tax avoidance on an industrial scale." She says, contrary to its denials, the tax arrangements PwC promotes, based on artificially diverting profits to Luxembourg through intra-company loans, bear all the characteristics of a mass-marketed tax avoidance scheme. She says, "We consider that the evidence that PwC provided to us in January 2013 was misleading. In particular, its assertions that," and she quotes, "we are not in the business of selling schemes," and she quotes, "we do not mass market tax products, we do not produce tax products, we do not promote tax products." She says the fact that PwC's promotion of these schemes is permitted by its own code of conduct is clear evidence that government needs to take a more active role in regulating the tax industry. She says, "We have published relevant reports about this in December 2012, April 2013 and June 2013. She says, like the other big four accounting firms, PwC provides tax advice to its clients in line with an internal code of conduct, and that code does little more than shroud the way PwC exploits flaws in international tax laws to devise and offer aggressive tax avoidance schemes to its clients." As reported in The Guardian in 2013, 11 years ago, the so-called Big Four accounting firms are using knowledge gained from staff seconded to the Treasury, this might sound familiar to you, to help wealthy clients avoid paying UK taxes. Deloitte, Ernst & Young, KPMG and PwC have provided the government with expert accountants to draw up tax laws. But the firms went on to advise multinationals and individuals on how to exploit loopholes around legislation they had helped write. Margaret Hodge said, "The actions of accounting firms were tantamount to a scam, represented a ridiculous conflict of interest, which must be stopped. The large accounting firms are in a powerful position in the tax world and have an unhealthily cosy relationship with government." Now, at this point, you might be inclined to say, okay, well, these things happened 10, 11 years ago. Is there a pattern? Well, in that regard, I would refer you to the testimony of Michael O'Neill, the CEO of the Tax Practitioners Board, evidence that he gave to Senate estimates in February of this year, in which he said, and I'm paraphrasing, "The Tax Practitioners Board has evidence that PwC has inserted itself throughout the OECD to influence tax policies and tax treaties and tax regimes to favour their multinational tax evading clients." So the point that I want to make, the first point that I want to make, is that the activities that we have seen in Australia, this is not an aberration. This is not an anomaly. This is not a mistake. This is not on this occasion. This is not their first rodeo. This is their business model. This is what they do all over the world. A business model employed by what I would describe as an international criminal cabal, a mafia. Now, of course, at this point you might say to me, mafia is a strong term to use, especially when providing testimony to a parliamentary inquiry, especially for a witness who's protected by parliamentary privilege. And I would say, yes, I agree. Luckily, that term is not mine. That is a term that is used in the title to a report written by one of the most eminent members of the House of Lords, Baron Prem Seeker, the Lord Kingswood, in a report entitled "The Pinstriped Mafia: How Accountancy Firms Destroy Societies." If I may, I'd like to read you just a couple of points from the summary of his report.
Thank you, Professor Schmulow. And after that, we might go to questions if that's possible. Thank you.
4 major firms, they employ thousands of individuals for the sole purpose of undermining tax laws that do not create any social value, but enable corporations and wealthy elites to dodge corporate tax, income tax, and anything else that might enable governments to improve the quality of life. The loss of tax revenues is a major cause of the current economic crisis that is inflicting misery on millions of people. He says tax avoidance is part of the guerrilla warfare conducted by accountancy firms. He estimates in 2011 that UK tax tribunals hear around 11,000 cases. Many of those relate to dodgers that have no economic substance. He says the UK is estimated to be losing around £100 billion of tax revenues each year, and a large part of this is due to the activities of the Big Four accounting firms. Before we go to questions, Madam Chair, I thought what I would do is I would end my opening statement with some brevity, something that may amuse you. This is a quote from Living Our Purpose and Values, PwC's Code of Conduct, dated April 2021, at page 18, and I quote, "We never trade on or inappropriately disclose inside information." Boom, boom. Thank you.
Thank you very much. Is it all right if I just go Professor Schmulow? That'll be...
Andy's fine.
It'll run off the tongue a lot more easily. So if I can just take you to one part of your evidence. Thank you for your submission number 68, where you talk about the revolving door. We have had some discussion about this, but I'm particularly interested in your perspective and recommendations about what a suitable response might look like, apart from the establishment of a working committee. What elements of a proposed framework for preventing the phenomenon of a revolving door have you already given consideration to? So I'll let you speak to that part of your submission, and I think my question is quite clear.
Thank you, Senator. I've had a fair amount of involvement in this question. I've conducted research into strictures in South Korea, where they have a very advanced regime for preventing the revolving door. And in 2022, I was invited to produce a white paper for the European Parliament, which I delivered in Brussels at the end of 2022 on combating the revolving door. The revolving door is an insidious, corrosive, and corrupting phenomenon. It is what Senator Elizabeth Warren describes as a pre-bribe. And the way it works is this: nothing need be said, but there is an understanding. If you look after us in government now, we will have a cushy position for you later. As I say, Senator Elizabeth Warren describes this phenomenon as a pre-bribe. It enables large consulting firms, and not just consulting firms, it must be said, firms that produce goods and services for defence procurement or whatever the case may be. It enables them to get preferential treatment. It enables them to get preferential access. It enables them to corrupt and corrode good, arm's length, dispassionate, rational procurement. And it can be stopped. There are procedures and processes in place in countries like South Korea, and now with the EU Ethics Oversight Authority, that enforce gardening leave, as it's called. But it's got to be enforced. So one of the things that the inquiry conducted in that other place heard was of a gentleman by the name of Cochrane, who was a senior official in the Department of Defence and went to work for KPMG and was given a 12-month period of gardening leave. And KPMG, in terms of the testimony that was heard, openly boasted about the fact that Mr. Cochrane was violating that gardening leave. So one of the things that the European Union has done with the creation of the EU Ethics Oversight Authority, which I provided input into, is to ensure that there are mechanisms to check or to enable people to report when senior officials breach their gardening leave, and that steps can be taken to bring sanctions down upon them and the firms that they work for. Otherwise, the temptation is just too great.
Regulatory gaps and enforcement failures are cited to us in multiple submissions and in evidence that we've received in the course of our public inquiries. Have you mapped, do you have any insights into the regulatory gaps that are evident in the Australian system with regard to the revolving door that you've just described?
My understanding is, in terms of the regulatory strictures that are in place, there are none. Now, we shouldn't feel too bad about this, because prior to debate in the European Parliament about the creation of an EU Ethics Oversight Authority, they had the exact same problem. They had requirements for gardening leave that nobody was appointed to check on or enforce. But I can tell you, if you don't have some mechanism by which to enforce these strictures, then it is nothing more than, at best, the legislative version of virtue signalling. And
given that real threat of declaration without action, and how that would further undermine confidence and see the consequences that we fear continuing, noting that you've also said that it's not just about public servants, but there are big entities that are moving, I think, into the public service as well as out of the public service, and you talked about defence in particular. Where would such an enforcement, a compliance and enforcement entity sit in our current structure, and to whom would you entrust that task?
If you asked me to give you a solution that was a quick and dirty one, I would say one way to do it would be to provide...
A quick and ethical one would be the best one.
I should choose my words, especially in this context, I should choose my words more carefully. A quick and ethical one, I would say give the authority to the NACC, the National Anti-Crime and Corruption Commission. I say that because it is an entity that, in my observations, is well insulated from undue pressure and from corrupting forces.
Regulatory capture of any kind.
Exactly. And, you know, perhaps they might need some additional budget, and they might need a subdivision within the NACC to ensure that gardening leave is enforced. But if, with an eye on the kind of political fallout that always comes with trying to establish a new agency, and some portions of the community wailing about extra costs and the government's only getting bigger, and setting aside the costs to the community of not enforcing this stuff.
Echoing back to your original story with which you commenced.
Yep. I would say that to provide that to the NACC, to me, would appear to be a logical solution.
Okay, thank you for that. Could I go to another matter that you discuss in some detail? The auditing and consulting should be separated. We've had some evidence that talks about the benefit of separation that's operational rather than structural. You seem to be, you have a particular view. Could you expand on your view and compare and contrast that with any other public evidence that you're aware of with regards to perhaps Professor Phil's or Mr. Samuel?
So, to address first the issue of structural versus operational. I cut my teeth as an academic observing the practices that gave rise to the Banking Royal Commission. And where did the rot begin? With financial advice. We were told by the proponents of integrated financial advice, the proponents of vertical integration, that conflicts of interest could be managed, that there's nothing to see here, that we've got everything under control. The reality is, in theory, conflicts of interest can be managed, but the greater the conflict, the more widespread the conflict, the more attenuated the conflict, the smaller is the chance that you're going to get it right. It's just a question of risk. Everybody in the industry understands risk until it comes to them managing conflicts of interest. Then all of a sudden they lose their minds. The point was made to the proponents of financial advice, you are going to end up product flogging. No, we've got it all under control. And what happened? They ended up product flogging. If you want to build regulatory structures that work, instead of having faith in the ability of people to manage conflicts of interest, why not have faith in people's inability to manage conflicts of interest and design regulation accordingly? Design for the worst case scenario. Plan for the best, hope for the best, but plan for the worst, except for the hope for the best part. You can just ignore that. Just plan for the worst. So if you plan for the worst, then you start to say operational separation is still going to present opportunities for conflicts of interest. And we will be told the same boring twaddle about Chinese walls and insulated floors and God knows what else. None of that stuff works. We've seen it doesn't work. How many times must we see it fail before we say that stuff doesn't work? So rather, let's have structural separation. And if you look at the...
Can I ask Professor Schmulow if it really has to be an either or is there a layer of operational separation that provides like a first level of response and then further structural reform embedded in under that? Could that possibly work?
I have a cynical view of human nature. I have a cynical view of human nature, particularly when people are confronted with the opportunity to make themselves wealthy on an intergenerational scale. I think that the temptation is too great, and I think that when you have a half-baked separation, what you will end up with is a spot of rust. And you know what happens with rust? It spreads. There is nothing you can do to stop it. It will spread until it has taken over the entire structure. We have seen instances where there have been, you can give it any name you like, layers of insulation, buffers, efforts to insulate one part of a business from another. Ultimately, they always break down because people are presented with an opportunity to make money out of conflicts of interest. So here's an idea. Don't give them the chance. And in the United Kingdom, the Bryden Review and the Kingman Review looked at this, as did the House of Commons Business, Energy and Industrial Strategy Committee, The Future of Audit, which they published in 2019. I'm not sure if your inquiry is familiar with that report, but they recommended in no uncertain terms structural separation. And they said, and I was interested to hear some of the testimony that was provided before I appeared today. Some of the testimony that was provided by the, was it the Institute of Public Accountants?
IPA, yes.
Yeah. And the testimony was what I would put in the category of it's too hard, but if I can put it in the vernacular, it's too hard, it's too difficult. It's not. It's not. And when you've stuffed up for so long, in so many instances, then you're going to have to put up with the hard work of creating something different which will no longer abuse the public's trust and damage the public good. And the Future of Audit inquiry, if I can just conflicts of interest and auditor independence They state there are still fears that auditors are conflicted by the commercial culture in which they operate. Advisory services do not sit easily within the culture of challenge required by audit. Audit is cross-subsidised. Whenever audit is cross-subsidised, somebody's going to have to pay the piper. They say on page 32 of their report, they talk about structural separation. They say the CMA's structural split is the most radical proposal, involves splitting audit and non-audit into two separate and independent legal entities. They say that we believe that there is a strong case for independent audit firms. That is their conclusion.
You'd be aware of the counter-arguments to that too, Professor Schmulow.
I am, and I find them, to be frank, Senator, I find them whiny. And they tend to go to a place of dark and amorphous fears about unintended consequences and the possibility that the sky will fall on our heads. What nonsense. The sky is already falling on our heads.
They frequently speak about the inability to recruit into such a structure and the importance for engaging with a new generation in work that is more enriching, more enabling and more interesting than what's required in audit. Do you have a response to that proposition?
What nonsense.
Okay.
And may I say, auditors have never been people who live for living on the edge. There's a very particular kind of person who goes into audit. They get born that way. They come out of university, they want to do audit, they'll do audit. Doesn't matter what happens with the rest of the firm, they want to do audit, they'll stay in audit.
Professor Schmulow, it's been put to me that there is a very, very different set of responses to the work that we're doing through this committee and also to the reports that have been put out by the government. That the audit teams are livid that they've been caught up in some general malaise of PwC and other companies as well, other conglomerates as well, because the practice of audit is so culturally different from what's surrounding them under the heading of those multiple alphabetical combinations. Do you have a view about the quality of audit and audit as a part of these businesses already being in a different kind of realm from the other parts, the consultancy sector, the tax advisory sector in particular?
Yes, I do, and I actually have a great deal of sympathy for that position. I am, as you may know, not shy about criticising Big Audit or PwC, but PwC's audit, their audit function, is arguably the best of the Big Four. And there is a certain type of person who goes into audit. They're probably not the most exciting people to talk to at a cocktail party, but they're very dependable. They're hardworking, they're diligent, they're head down, they're the kind of people who are enthused about work that other people might not be. And
quite exacting work?
Very.
Okay.
Very. And I think that they have been... I have no doubt that there are a lot of people in audit, not just at PwC, who are looking at the rest of this bacchanalian feast that's going on under their roof, and they're going, we want nothing to do with this man. This is not who we are.
I really appreciate you putting that on the record, because I think in the evidence that we've received from lots of people, they're very despairing of the entire sector being caught up by the actions that have now become prominent. But if I can put to you one of the corrections that is being much touted, and in fact it's considered, I think, by some in PwC in particular to be so worthy of adoration that this committee should just pack up and move on, And that is the suggestion that governance is going to fix matters. Now, the people you've just described, auditors, are represented by partners in the audit sector who are on the board, who share in the profits of the entire company. Current governance arrangements clearly did not allow them to discern what was going on with what you described as the bacchanalian feast occurring in other parts of their own partnership. So governance doesn't give me great comfort as the response that's going to solve the problem that I think is well understood now. What is the impact practically of having independent board members in these entities? Is that sufficient to fix problems of the scale that we've seen? Rather than that, perhaps you might have some suggestions, and I invite you to make comments about the number of partners.
That's a bait and switch trick. Independent directors of PwC may be independent in the strict sense, but I can assure you no independent directors will be appointed who are not team players, who don't understand the need to be one of the boys. They're not going to appoint me as an independent director, I can assure you. Mm. So what they do is they'll get people like, and I'm
perhaps don't name an individual,
okay,
but describe a character.
Well, there's a person who did a report for PwC.
I think that's probably a little too identifying.
Right. Well,
I prefer you to talk about what the fundamental problem would be rather than particular individuals.
The fundamental problem is the partnerships will make sure that independent directors who are appointed will not be of a kind who will rock the boat.
On notice, could you have a look at KPMG, who instituted that in 2017? And if you have any insight into how that has led to better practice in KPMG, I'd love to be comforted. I fear that may not be the case. Any other insights into where independent directors on boards has made change of the scale and order that is required? And if you have time later, or perhaps on notice, speak further to your views around partnership and the number of partners that might be a functional model. I need to share the call with my colleagues, and there's been an indication of questions from Senator Scarr and also from Senator Pocock. I'll go to you in the first instance, Senator Pocock.
Thank you, Chair, and thank you, Professor Schmulow, for being here. I wanted to ask you about your personal experience as a witness and in giving evidence to our committee. I'm conscious that the entities that are under investigation here are very large and influential, and I've heard from witnesses that some people have felt pressure in the way they have responded to us as a committee. I wondered if you could tell us whether you have felt any pressure or had any experience, which you're a very forthright witness, which has caused you discomfort or which has been brought to bear.
Thank you, Senator. Yes, look, I must make full disclosure. I'm not a shrinking violet, and I'm sick and tired of seeing what's going on in the industry, and I see a very close connection between what's going on in the industry and the destruction of society. And so I've called that out, and I've called it out in no uncertain terms, but that's my right to do. I live in a democracy. I enjoy the right of free speech. I enjoy the right of academic freedom. And what I've found is on 3 occasions, PwC in particular has attempted to come after me. So on the first instance, a fellow by the name of Peter Domkins or Domkis, something like that, started to engage with me in a debate on LinkedIn, and I said something fairly innocuous, like, if you don't want to respect Parliament, go and operate in North Korea. And he immediately said, I'm bullying a fellow academic because he's got some kind of adjunct at UNSW. I said, Tim, you're not an academic. You're a full-time partner in PwC Legal. Don't come the raw prawn with me about I'm a fellow academic and I'm being bullied online. But what he did was he made sure to copy in my head of school so that, in a university that's risk averse and a human resource department that's risk averse, they got very nervous about the whole thing.
Before you go any further, I know that some of this is already on the public record. There may be elements that you are putting on that are fresh and new today. Just want to make sure that you're aware, and anybody who's listening is aware, that there would be a right of reply for somebody as a natural course that the Senate would allow. That's procedural.
But please continue.
Yes.
Then when that wasn't sufficient to shut me up, PwC had their lawyers write to the University of Wollongong and make what I can only describe as a somewhat secretive complaint. So I've never seen the complaint. I was not allowed to see the complaint. They brought the complaint against me under confidentiality provisions which are designed to protect vulnerable complainants. This is a global $53 billion annual revenue firm. They're not vulnerable. They're certainly not vulnerable to me. And they, instead of making some claim that I'd defamed them or something like that, they tried to troll through the university's social media policy and try and get me fired. That was an unpleasant experience, obviously, but it was one that I was able to bat away fairly easily when my human resource department asked me to justify the things that I'd said. Put it this way, after about 45 minutes, they said to me, "Okay, we've seen enough." And I was like, "But I've got more." When that wasn't enough, I noted that Peter Van Onselen in The Australian called for my invitation to address this committee to be rescinded. Neglected to mention that he's married to Ainsley Van Onselen, who's the CEO of Chartered Accountants Australia and New Zealand, who I've also criticised for her and her organisation's lack of determination, in my view, to tackle these problems. And so I'm sure that I haven't heard the last from PwC. I can't say how, but I have it on inside information that they're waiting for things to die down and then they'll come after me again.
That is a real concern to me as a senator on this committee, that an organisation would apply pressure like that. And I must say, I have heard from a number of insiders inside big consulting firms who have been unwilling to give me their names or any personal details, but have provided information. So there is a feeling of intimidation amongst other witnesses as well. So thank you, Professor Schmulow, for putting that on the public record.
Senator Pocock, before you go, I just want to read in, because it hasn't been read since this morning and I think it's pertinent. This is the opening statement that was read this morning, an excerpt. "I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as a contempt. It is also a contempt to give false or misleading evidence. Witnesses also have a right to be heard in camera." Thank you. Please continue.
Thank you. I wanted to go also to your view about the fact that PwC specifically, PwC International, has been unwilling to provide to the Australian public, and certainly to us as senators representing their interest, the Linklaters report, or to provide specific details about who internationally is implicated in the PwC scandal of monetising confidential information about assisting multinationals to avoid tax. What's your view as an expert witness on that withholding of that international report and information?
Well, first of all, Senator, I query whether the report is confidential to begin with, because I think that there is an argument to be made that Linklaters is not acting as PwC solicitors, but is acting as a conflicted crisis manager. After all, they are audited by PwC, and they have a number of other linkages with PwC. So I put a question mark over that. But
Can you provide that further detail on notice and continue answering the question? We'll provide you with a set of questions.
But let's assume for a moment that the document is protected by privilege. The privilege is in the possession of PwC. they are the possessors of that right. That means that they can waive that right like that. There is nothing to stop them doing so. They've said they can't waive that right because it's confidential. Yes, but they can waive confidentiality when it's their confidentiality. So their backup argument has been, yes, but it names individuals, and that would breach their privacy. So they had reports written in Australia that named individuals: Burstein, McNabb, Douglas, Kaleja, Conadiris, Collins, Seymour. Many of those people objected to being named. They said they hadn't been given a right of reply. At least one of them is suing for being named. So it's interesting, when it comes to their Australian partners, they're okay with breaching their privacy, but when it comes to the gods of PwC in London and New York, it's different rules, apparently. And finally, they've said those partners' safety may be at risk. What gives them that idea? The partners who are in Australia, who live in Australia, and who are partners in a firm that has betrayed Australia to the dirty 34, the world's 34 most notorious tax evaders, we haven't had any reports that their safety's been threatened. So why would a partner in London or New York, living in a jurisdiction where the vast majority of people don't know what's going on here and don't care anyway, why would their safety be at risk? These seem to be straw men arguments. Now, as regards the inability to produce that report was commissioned by an entity called PwC International. PwC International is a holding company, not a trading company. The only thing it does is it manages the global network, and it does so through a board of directors. Sitting on that board of directors is an individual by the name of Patricia Carney. As a director of PwC International, she has either been given a copy of the Linklaters report or she is entitled to see it. That is the nature of being a director. Ms. Carney is a partner in PwC Australia. That means, for all intents and purposes, when PwC Australia says they can't give you the report because they don't have it, I dispute that. Either they already have it or they are entitled to get it. And all that Kevin Burrows would need to do would be to put his head around the door of an office that's probably 2 or 3 doors down from him and say, Paddy, show me the report. So why are they not showing our Parliament the report? Because...
It seems the sterile corridor might be working in this instance, Professor Schmulow.
No, I don't think that's the reason. I think the reason is that PwC International, an international accounting and assurance behemoth with global reach and infinite resources, has nothing but arrogated contempt for our Parliament.
I wonder if you could comment then, in view of what you've just said, about the experience that we have heard about from Kristen Stubbins, who was briefly in the role of acting CEO in PwC and had a 30-year career, which she described to us in evidence as a wonderful 30-year career in audit. Yes. So one of the people you described as loved their job, very distinctive work program, separate from the matters that were unfolding in other parts of the firm she was employed in for those 3 decades, but who was unceremoniously dismissed from the acting CEO role, long distance, and we saw Mr Burrows come in.
Against her will?
Yes, certainly Kristen Stubbins was enjoying the role and expected to continue in it and looked forward to that. What's your view about the structure, which is very opaque, of the international structures of PwC and their influence and reach in the domestic elements entity of PwC? What do we see here before us in terms of control and relationships and power?
I think, to give you a very shortcut answer, to provide a shortcut to my answer, what you're actually seeing is something that's very personal. It's not really about the international agreement or the international structure, or it's about something very personal. There are 22 individuals who are the most senior, the most powerful, the most influential partners in a global accounting and audit behemoth, who acted in Congress with partners in Australia to undermine the authority of the Australian Tax Office, to obfuscate the rule of law, to frustrate our judicial system, who acted in Congress to attack the interests of His Australian Majesty the King. They don't want you to know who they are. They don't care about the local partners, McNabb, Burstein, Kaleja, Conadiris. Throw them under a bus. They are collateral damage. Thank you. That's exactly the term I was looking for. They're collateral damage. But the gods in London and New York, they will do whatever is necessary. And whatever is necessary is turning out to be something quite extraordinary. They're endangering their position in a G8 economy. They cannot claim to be a global accounting and assurance firm if they do not have a footprint in a G8 economy. They're willing to jeopardize that to protect the identity of 22 individuals. And that's what it comes down to, in my view.
So taking that a little further and thinking about the role and the capability of the nation state, the capability of our parliament. In your opening statement, you talked about the chronicle of repetitive behaviour in very resourceful and robust governments like the UK and the US, where we've seen repetitive examples of poor behaviour, and you have pointed out to us this is not a one-off. This is not an aberration. There is a repetitive pattern of behaviour and a business model which leads to these very challenging and appalling circumstances that are difficult for a government to manage, given the multinational character of the organisations. What are the lessons here then for the nation state and for a parliament? And what's the, are they ungovernable, or are there ways forward for us to manage this so that the Australian citizens are not back here? 2015, 2018, 2023, 2025.
Without doubt, you've got a fight on your hands. Make no mistake. If I may, let me just read you a part of an email that I got from a member of the House of Lords on Monday night. I won't identify his or her name. This is about the separation. She says to me, "Hi Andy, thanks for coming back so quickly. I'm not sure the UK was going to go for complete separation, but there were some good reforms proposed. If I'm honest, I think the Bryden Review ended up with too much in it which had the effect of overload and helped those who were trying to push back. Then it got entangled in the issue of capital market doldrums with chairs and CEOs saying it was a deterrent to UK listing. So in the end we get nothing, not even all the things the earlier Kingman Review proposed." Then this person says, "The stranglehold of the accounting firms and more widely consulting firms, including those specific to industries such as transport, is a dead hand over everything. If you want to know what is killing the UK capital markets, it is these consultants that are not only threaded throughout government, but now essentially control government procurement systems, making it difficult for companies to get on the ladder. And with no government procurement, private procurement tends also to be blocked." There's no doubt you've got a fight on your hands. But if you understand the individual components of this problem, there are without doubt things that you can do. And the first and most obvious component is the misuse of legal professional privilege. If you want to provide advice to a client that encourages them to commit the crime of tax evasion, you take an enormous risk that that advice will be discovered. And if it is discovered, the person providing that advice could go to jail. That advice won't be discovered if you cover it with legal professional privilege. Now, in ATO versus PwC, Mr. Justice Mashinsky was asked to review 44,000 documents covered by legal professional privilege. He conducted a sample If his sample had found 1 or 2 or maybe 3% of those documents shouldn't have been covered by privilege, you could say, oh, well, it's a difference of interpretation. If it had been 5%, well, that's 1 in 20 documents in 44,000 that might be covering up the crime of tax evasion. Do you know what figure he came out at?
I do, yes. But do illuminate.
58%. 25,500 documents.
And for the record, so that it's here with your evidence today, the selection of the documents was agreed by both parties, I understand. So half of those ones that were determined to be 58%, at the 58%, were actually nominated by PwC themselves. That is my understanding. Do you know if that's correct, Professor Schmulow?
That is also my understanding, but I haven't delved deeply into into the way in which the 116 sample documents were chosen.
Let's just get that clarified for the record. Yep, thank you. Go ahead.
So how is this legal professional privilege caper conducted? And let me just point out to you, this is not a caper that only gets conducted in Australia. In the Prudential Life case in 2013, the UK High Court found that PwC was routinely abusing legal professional privilege to hide advice that may be criminal. So how is this advice created? It's created by having an internal law firm. It's a play, pretend law firm. It's not a real law firm. Nobody goes to PwC Legal to get their conveyancing done or lease agreements done. It's there for one reason. In fact, PwC didn't even use them in their complaint to the university about me. They used Allen's. The role of that law firm is to be an internal PO box. So every time you give advice to a client that may be encouraging tax evasion, you send it through the internal PO box, and they then on-send it to the client, and they will then turn around and say, it's been seen by a lawyer, it's legal advice, it's covered by privilege. That's not what privilege is for. Or they'll put a junior lawyer in a meeting. That lawyer can sit there with his headphones on listening to the footy. Doesn't matter. As long as there's a lawyer in the room, they'll turn around and say the discussion that was had in that meeting was legal advice and it's therefore covered by privilege. In fact, JBS, the Brazilian-based meatpacking company and a notorious international tax evader, actually wrote to PwC and they said, we want all of your advice, all of your tax advice styled as legal advice so that it's covered by privilege. How do you fix that problem? Easy. You prohibit accounting firms from owning law firms. They should never have been allowed to own law firms in the first place. In fact, lawyers and auditors will at times be on opposite sides of a conflict. I think of trading in insolvency. I think of faulty or defective financial statements. To have lawyers in the same firm as an audit firm is absolute lunacy. It should never have been allowed to happen, and it's very quick and easy to unwind. Unwind that, and all of a sudden, how do we provide advice that encourages tax evasion when we don't have the internal PO box?
The things that you're describing are repetitive across different countries and in different firms, as are, for example, the cheating examples that we have heard a lot about, and others as well. Are we looking at sleepy states, state forms that are too sleepy to capture and respond to? Have we got, is there a pressing case, it seems there is, for a more muscular state, for a more muscular Senate, for a legal response, a regulatory response that is a lot stronger? Because at the moment, we can, we're a well-informed Senate with a lot of resources and a year's work, and yet many people are unaware that a cheating event has occurred in multiple countries, that the hiding behind legal professional privilege is not just a strange set of unusual events. It has been a repetitive strategy. What do we need to do to build the muscular response? And also, do we need to guard more assertively against state capture of our regulatory machinery, not just in Australia but internationally?
To much of that, yes, and to some of it, no. The inquiry that has been conducted in that other place chaired by Senator Colbeck, is to my mind one of the most outstanding examples of parliamentary oversight that I've ever seen. And the vision of 3 senators from 3 different parties, yourself, Senator O'Neill, Senator Colbeck, working closely together, putting partisan politics aside to pursue the public good, has been an uplifting, life-affirming and immensely satisfying experience, but it's unusual. I'll take you back to the 2019 inquiry headed by Senator Patterson, an inquiry that was precipitated because Ernst & Young was found to have lied by omission on a statutory report to the Australian Prudential Regulation Authority. I mean, that's just, who does stuff like that? The outcome of that inquiry was a slap on the wrist, and it was bitterly disappointing. And I'm afraid that in a few years' time, there may not be people in the Senate as well-equipped as yourselves, as diligent, as intelligent, as resourceful, and as meticulous. So I would say I would like to see you strike while the iron is hot and do something different. Something different means a board of oversight that has real power and authority to bring down crippling punishments for misbehaviour. Now that speaks somewhat to the Treasury recommendations made last week, but only somewhat.
Could you expand on that? How should it be? So, you know, I don't want you to go on because our time is limited. You may take it on notice.
Maybe
take it on notice.
And when you're looking at that, and I'm assuming you were referring to the 2 Treasury documents that were released on Friday, we have before us legislation, the Treasury Laws Amendment Tax Accountability and Fairness Bill, which in Schedule 1 deals with promoter penalty law reform. So these are already in place, ready to go in the Parliament. The extension of the tax whistleblower protections, the tax practitioner board reform, and the information sharing, all of which are featured in the discussion this afternoon. If you might refer to that as well, because that is on the cusp of hopefully being adopted within the Parliament.
Can I answer that now? Because I think it will enable us to progress in here today.
Great.
The solution is implementation, and implementation is all about who you have on the board. You cannot have partners from big audit on the board. Audit firms are like termites. They build nests. They nest with each other and they look after each other. And today I'm not going to discipline you because today it's me versus you, but tomorrow the roles might be reversed. So once again, the boys club, we don't rock the boat. Who you've got to have on the board? Retired judges, retired attorneys general, and nobody from big audit, nobody from the firms who are being judged. The moment you let them onto the board, the good old boy mentality comes back. It's that simple.
And is that question of regulatory capture alive in every country, do you believe? And certainly, do you believe it's a significant question here for us?
Absolutely. The scholarship around regulatory capture includes the work of Nobel laureates like Mareva Bernstein. It has been observed in financial regulation since the 1860s in the work by Charles Francis Adams Jr. Wherever manipulating government gives private entities, private enterprise or private individuals the opportunity to make significant wealth, they're coming after you.
How do you think, this is a shift in terrain a little, how do you think the Big Four benefit from being partnerships rather than corporations, and what is your recommendation or your thoughts on that question?
And maybe that's where you might address the size issue as well.
Good, yes.
Thank you.
The partnership law is completely inadequate to the task of a partnership of 1,000 people. The partnership law is designed, it's an interesting law, it's designed to automatically activate even if people don't consciously say, let's be a partner. To be a partnership, all you need is 2 people or more who decide to do something not that will make a profit, but where they hope will make a profit. That's it. If you hope you're going to make a profit with your mate next door, bang, you're a partnership. The law activates automatically in order to protect people in those positions, in order to protect their rights and enforce their obligations. When you expand that to a partnership of 1,000 people, how is it possible that in a partnership of 1,000 people, 1,000 people can be watching each other? Because remember, partners are jointly and severally liable for one another's debts. How can 1,000 people be exercising oversight over one another? It's absurd. But on top of that, when you have partnerships that are pulling down $500 million in taxpayer-funded projects per year per partnership, not in total, per partnership, and those partnership arrangements are opaque, and there are no enforceable directors' duties. And look, here at this point, I've got to say, one of the problems with Australia is we don't enforce directors' duties very well, but that's a long and torrid and very tragic tale for another day. But at the very least, there's at least a remote possibility that a firm that has directors, those directors could be held liable for breach of directors' duties. There are no directors' duties with partnerships. They can do whatever they like. And you can't come and ask them what's going on because it's a partnership. Everything can be kept secret. This is not what the partnership law was designed for. And if these partnerships, my suggestion is not to force these partnerships to incorporate, but rather to say to them, you don't have to incorporate, but if you want to touch 1 penny of government money, you have to incorporate.
Because that is the special thing, isn't it, about the Big Four or larger contracting firms to the government, that they are a significant part of their revenue is public money, so the accountability requirements should be meet a higher threshold.
Of course. Of course there must be accountability requirements when you're pulling down $500 million in taxpayer funds.
So have you got any thoughts on size specifically and what is an appropriate size partnership in this space?
Law firms, I believe, are limited to 300? 400?
Yeah, 400.
I'll be generous and say 400. Now, at this point, firms like PwC might say, well, we can't do big audits. We won't be able to do Westpac or National Australia Bank. Where there's audit money to be made, partnerships of 400 will cope admirably.
Okay, thank you. Have you got any views? I understand our time is...
Senator Scarr's got some questions.
Okay, can I ask a last
Yes,
question?
please.
Chair? Thank you. Have you got any views on the publication and more transparency around settlements with the Big Four or with tax organisations paying tax who make an arrangement with the ATO when they have transgressed? And at present, there isn't a lot of transparency about such settlements in Australia, and certainly there was the example with PwC, if I've got my story right. Sometimes I remember things wrongly. What are your thoughts about being more open about settlements with large firms?
I understand the counter-argument, which is that the ATO will make the argument that in order to have settlements and in order to avoid going to court, sometimes we need to do these things behind closed doors. But my response is, do you really? William Brandeis said, sunlight is the best disinfectant. I think that there are very worrying opportunities for the rules to be applied differently for the wealthy or for large corporations in reaching tax settlements versus the man or woman on the Clapham omnibus. And that's not good for democracy. It's not good for inculcating confidence in the public, in government and the institutions of government.
And it really is a free kick for someone with deep pockets, which most citizens don't have. Is that the point you're making?
Yeah, and I think part of the reason why it's often applicable to entities with deep pockets is because the ATO says it's easy for us to do the low-hanging fruit, the corner milk bar, because what resources have they got? But if we're taking on Glencore or BHP, well, they might have a litigation budget that's bigger than ours. So I tell you what, they owe us $100 million. Let's settle for 50.
Thank you for all of your answers, Professor Schmulow.
Thank you. Before I go to you, Senator Scarr, can I just take you back to a little part of the evidence you were giving to Senator Pocock with regard to the 22 partners, and you declared that they don't want us to know who they are, they being PwC International. We do know the holding company, because you've, in Britain, that has the Linklaters report that we have such interest in. We do know the board members of that. Do you know, or is it public knowledge in some form, the 22 partners to whom you refer?
It's been reported in the media, and that was a quote. I think that was a quote taken from perhaps Jeremy Hirschhorn. I can find that for you. I think it might have been reported in the Mandarin by my colleague Tom Ravlick.
So, around the traps, people do know who these people are. You've referred you've referred to two particular jurisdictions in your response to Senator Pocock's questions: New Zealand, US and UK. You said New York and London, but we know that the makeup of the holding company, PwC International in London, has representatives from other jurisdictions as well. Can you put on the record what those jurisdictions are? Do you know who that is?
I could look it up. I mean, PwC International's Board of Directors is a matter of public record, and it's listed on the UK Companies Register, and it lists who the board members are and what jurisdiction they hail from. There's only one from Australia. Most, I think, are from the UK and the US.
But there are representatives from the Asia-Pacific region,
yes, Singapore,
as well, and EU.
Yep.
So we are truly talking about an international body. We can probably access a fair bit of that publicly. But can I just ask if there is any further information that you have access to, that number of 22 partners, and any further information about that would be of considerable interest to this committee. I also ask you to think about the nature of the questions that you've been asked thus far, and to think about any points of distinction or any actions that indicate a different culture operating within EY, Deloitte, and KPMG, because I would be interested in your view from your observation and interactions with those other entities, if there is any difference, or if we are talking about the same business model, in essence, just with a slightly different flavour.
I don't have any further information on who the Dirty 22 are.
Mm-hmm.
In terms of a difference in the ethos of other firms, as critical as I've been of PwC, I think KPMG is worse.
And on what do you make that assertion?
I grew up in South Africa, and KPMG's conduct in South Africa was not just egregious, it was spectacular. They actively aided and abetted the former President Jacob Zuma to steal everything that wasn't nailed down. They tried to assist President Zuma. It's quite amusing. They tried to assist President Zuma to get rid of his Minister of Public Works, a man of unimpeachable integrity by the name of Pravin Gordhan. So they issued a smear report in which they accused Minister Gordhan of running a brothel in the headquarters of the South African Revenue Service. Where would you run a brothel? In the headquarters of a revenue service? What, in the basement, in the records room? All of this came out in a series of articles in the Sunday Times. That then led to the Nugent and Zondo commissions of inquiry. Mr. Justice Zondo is now the country's Chief Justice. It led to President Zuma going to jail. And the conduct of KPMG was found to be so egregious and so disturbing and so gormless running a brothel in the headquarters of SARS, that South African companies, including my alma mater, the University of the Witwatersrand, fired KPMG to the point where it looked like they wouldn't survive, and their chief high overguard, whatever his name is, went to South Africa and did the little apology two-step. These are not our values. On this, always mention on this occasion, when no one's more disappointed than we are, we're going to transmit these learnings, transmit the lessons we've learned. We're going to transmit these learnings all over the world. 3 years later, in Australia, 1,000 of them caught cheating on what kind of an exam? An ethics exam.
And we've seen PCAOB fines of KPMG here in Australia and also in the Netherlands for a repeat performance of the same test scam.
Yep. And then, of course, the CEO, it wasn't enough for him to suffer the humiliation of being caught lying to Parliament once. He came back and did it again. And the partnership of KPMG didn't turn around and go, this guy's toxic. We can't have this guy representing us. He's been caught lying to Parliament twice, actually 3 times. First time he lied. The second time he lied was when he said, we too narrowly interpreted the question. And as you pointed out, you read out what the question was.
We've had the same technique applied to this committee. So I just might move on from there. But can I invite you to have a look at the evidence we received from Ayres today, who clearly outlined an international set of standards that is adopted across 130 jurisdictions, largely in line with what is operated out of the PCAOB, but not the same. And we see the influence of the PCAOB operating here into Australia at odds with what's going on here. Any further insight you can provide us with why you think the PCAOB is having some impact and how we might better deal with the multilateral nature of these entities that we're encountering? Well, in any creative way, I'd love to ask you for that. But I know, can you take it on notice because Senator Scarr has questions? He may have another line that he wants to pursue. So, Senator Scarr, you have the call.
Thank you, Chair, and thank you, Professor, for being with us. And at the outset, can I, as a lawyer by profession, can I say how much I enjoy your quoting Henry VI? But I did appreciate the rhetorical flair in your submission, and clearly there's a lot of passion which is behind the forceful submission which you've made.
Thank you.
Can I ask you, in relation to the evidence we previously heard from Professor Samuel, and you refer to him rightly as a regulator's titan, his proposition is that we should consider prohibiting a firm from providing non-audit services to an entity which it is providing audit services to. And that if we go beyond that, that would amount to overreach. I just want to give you an opportunity to explain what your concern is in relation to that proposition and what you see the gap is.
Thank you, Senator Skies. If I may reiterate, I hold Professor Samuel in the very highest regard, and so it is with the very deepest respect that I respectfully disagree with him. His solution is, if I recall, to say, if you're providing audit services, you shouldn't provide other kinds of services, but if you want to provide the other kinds of services, then you relinquish the audit function. The problem is,
correct,
in that transition, there are opportunities for a kind of regulatory capture. There are opportunities to, say, for example, say to a firm, look, we've got some misgivings about your audited financial statements, but I tell you what, we'll turn a blind eye because, we'd like to relinquish the audit work. And if we turn a blind eye, maybe you could look at us favourably for some consulting work. You just don't want that kind of stuff happening. And it's much easier to prevent that kind of stuff happening if you just have a structural separation.
But how likely is that to happen in the context of the example you've given, Professor? The firm on the one hand is saying we're currently providing the audit service, we'll turn a blind eye to X, Y, Z, but at the same time they're relinquishing the audit service. So there's going to be a new audit firm arriving on the scene who presumably will pick up whatever the previous audit firm picked up.
If I could answer your question with a question, how likely is it that the CEO of PwC, Tom Seymour, would state on the record that only Peter Collins was involved in selling Australia's tax secrets to the Dirty 34 until it became apparent that not only was it not only Mr. Collins, not only was it up to 70 partners at PwC, it included Mr. Seymour. Who would have thought such a thing would happen?
I guess the point I'm making is the check and balance in terms of the structural reform would be that the firm would be, under your example, the firm would be relinquishing the audit service, as a matter of fact, to provide non-audit services, and there would be a new auditor providing the audit services, and presumably they would pick up, or should pick up, if the system's working, the audit issues which form the basis of the promise to generate non-audit services work. Do you understand what I mean?
I do, and I very respectfully must disagree with the proposition of the question, because audit is not a forensic exercise. Audit is simply an exercise where auditors confirm the veracity of documents that the firm has chosen to show them. So whether a new auditor would pick up something that was wrong in the past is questionable. And I take you to some of the spectacular audit failures that have happened in the last 10 or 15 years. Carillion is an example. I've got in my notes several others, but there have been a whole number of spectacular audit failures, Carillion, BHS, etc. And so I think that putting a degree of faith in the inviolability of audit is misplaced. And in fact, one of the things that the Bryden Review in the United Kingdom does is it actually, had it been mandated, it would have required auditors to take a more forensic approach. So that forensic approach is lacking.
Okay. Can I move on to another question? And that is, as I understand the current position in the UK, the Financial Reporting Council moved down the path of what I refer to as operational separation of audit and non-audit services within a single firm. From your perspective, do you have a view with respect to that approach?
Half-baked.
Okay. So you think it needs to... Is there any jurisdiction at the moment, in your knowledge, which actually has successfully implemented this approach of completely separating, well, basically, I guess, presumably setting up audit-only accounting firms? So the only thing these firms can do is audit. Has this ever been applied anywhere?
No, but that is what was called for by the House of Commons review in 2019, a complete separation.
Okay. Okay. And do you have any views with respect to, if we were to do this, how it might impact the provision of audit services? So has there been, and happy for you to take this on notice as to whether or not there's been any research undertaken with respect to the issue at the moment. We have a shallow pool of firms that can provide audit services, especially the large corporates, and that's been commented on, and that's a weakness of the system, I think, the lack of competition. How would this approach impact that issue in terms of the supply of audit services? Do you have any views with respect to that?
Well, I don't think it would affect the supply of audit services at all, because if it's a thin bench at the moment, then it'll be a thin bench after a separation. People who do audit are people who do audit. So if they're doing audit at the moment under a combined model, they'd in all likelihood be doing audit in the future under a separated model.
Okay. want to, if I can move on to the next question, which is the big audit be prohibited from owning legal practices. Is it the issue big audit, or is the issue firms that provide taxation services owning legal practices? What's the I guess under your scenario, big audit, that's the audit firms would only do audit anyway, so that would be how that would be addressed. But from your perspective, the issue in terms of legal practices seems to be attached more to the provision of taxation structuring advice rather than provision of the audit services. Is that correct?
I would say that the provision of legal services and the conflicts that arise with the provision of tax advice is the thin edge of the wedge, but it's not confined to that. Auditors and lawyers are to be expected to be on opposing sides in cases of trading in insolvency or defective financial statements, and I think that lawyers and accounting firms should not be mixed.
Okay. Yep. I mean, sometimes in my experience, the same law firms can actually be on the same side as a particular accounting firm, and you might have liquidators appointed from within a accounting firm, and the liquidators need lawyers, and obviously there'll be lawyers representing creditors and other stakeholders. So there are situations where lawyers and accountants can actually be on the same side, though. That's the case, isn't it?
Yes, but they come to being on the same side through an arm's length association with one another. That's an audit-only firm appointing lawyers to assist it in a case of trading in insolvency is not the same as auditors dealing with a case of trading in insolvency and roping in their own tame law firm which operates at their behest. That's the nature, that is the crux of the conflict of interest.
All right, I understand the point. In terms of this legal professional privilege point and the inappropriate taking of legal professional privilege, let's assume that accounting firms no longer have legal practices. The issue could still arise, though, couldn't it, in terms of an accounting firm having a business relationship with a legal firm. So when the accounting firm provides advice, the legal firm's providing advice. Your example of a lawyer being present at the meetings, instead of the lawyer coming from within the firm, they simply get the lawyer to come from an external firm. So it's not necessarily going to cure the entire issue, is it?
I think that an accounting firm that calls upon a law firm, a separate law firm, to do things which that law firm, which in that law firm would raise eyebrows, I think that is a far more difficult row to hoe and a far more difficult arrangement to strike than simply snapping your fingers and saying, picking up a phone and saying, send us one of your appy lawyers, one of your apprentice lawyers, send him up. He can come and sit with his headphones on listening to the footy as long as he's in the room. I think that if an audit firm called up a law firm and said, that's what we want you to do for us, the law firm would be able to say, well, we're not a play, pretend law firm. We have other clients. We have other businesses we look after. And if we severely damage our reputation, then all of those other businesses that we look after will turn away from us. Whereas if you have a law firm that is a part of an audit firm, they don't have any other businesses they look after. The only business they look after is PwC.
Senator Scarr, I believe that there might be time for one more question from you, and I believe then there's one question from Senator Pratt. I just want to draw attention to your submission number 68, page 7, Professor Schmulow, where we discussed Peter John Collins and the tranche of emails a lot with regard to the matter of confidential material that was used. But importantly, the former ATO Deputy Commissioner Mark Conza, you note in your submission to us said the misuse of legal privilege was an issue of long-standing concern, and it was the latest tranche of PwC emails released last week showed that LPP was routinely applied to all internal discussions on how to exploit information provided by its former head of international tax, Peter Collins, through his role as an advisor to the government. So that dimension of the legal protection is well evidenced in those 144 pages, in addition to what the dominant story that is told out of those documents. So last question from you, if I can, Senator Scarr, and then one from Senator Pratt.
Okay, thank you, Chair. My last question's just in relation to the 10-year clean slate recommendation. Feel free to take this on notice, but I'd be interested to know if there are any examples of that sort of approach being taken in any jurisdictions, or and how those issues are managed in terms of imposing that sort of penalty, just to assist us getting our head around an appropriate time on the bench, as it were.
I'm not offhand aware of such arrangements elsewhere. I can tell you that, for example, for facilitating corruption in South Africa, McKinsey's was banned from doing work in the United Kingdom. I believe that ban was overturned after they challenged it in court. But I would say this: I think that a 10-year ban or a requirement that a firm report any scandal that has been attached to them in the last 10 years is a fantastic idea.
Okay, thank you. Thank you, Chair.
Thank you very much. Over to you, Senator Pratt, for the last question.
Thank you. Thank you very much, Chair. Can I ask, please, in relation to audit, internal audit, non-audit, and I guess in non-audit we mean, but also audit for non-financial matters such as aged care, childcare, those kinds of standards. Some of these firms are involved in the audit of regulatory matters rather than just financial ones, and that's certainly the case here in Australia, for example, within aged care.
So assurance.
How do you? I would like to know how we go about making a clear recommendation about how those should be divided in terms of what firms are allowed to do what. And in that context, how often do non-audit services move at the same time as an audit function does, because audits, financial audits, are required to rotate by law?
Senator Pratt, I'm not qualified to answer that question. I do apologise.
No, you're eminently qualified in that. Just gives me confidence in what you have already given evidence on, the fact that you don't consider yourself an expert
On everything.
in those.
Yeah.
Thank you, Chair.
Thank you, Senator Pratt. If I can ask again on notice, and there'll probably be further questions, Associate Professor Schmulow, the section of your submission where you talk about walking both sides of the street and you deal with the separate public sector, private sector work, I note the evidence that you've given there, but I was wondering if you could provide a recommendation of what you think best practice might look like. As I read, I didn't really pick up a recommendation around it, more a description of what the problem was, and I think we're certainly aware of that. So I'll just leave that one with you if I can. We thank you very much for your evidence today, Associate Professor Schmulow. That concludes this session. Can I indicate that questions on notice should be provided to the committee by the 29th of May, and the committee will continue very shortly with our evidence from the UK Financial Reporting Council.
Thank you, Senator. It's been a privilege to serve your inquiry.
Thank you very much.